Hello, everybody. Welcome to the last of the 4-day trade execution webinar series entitled How to Capitalize on Monster Moves in the Markets. My name is Mark Shawson, the pattern trader. And today I capitalize on monster moves in the markets. I overstayed my welcome and I'm getting shellacked in the aftermarket. Hopefully I won't give everything back. I made about $400,000 or $500,000 today. And I'm not kidding you. Here was the menu that I went into today with. I actually had 200 of these. I just got rid of a small amount. I should have gotten rid of many more. The market is rallying in the aftermarket. I was heavily short. So all of these are bets. All of these puts are bets on one or more of these indexes going lower. And today, the NASDAQ was down 4% and I was making a fortune. And now Amazon is up huge in the aftermarket and is pumping up the market. So we'll talk about that. I overstayed my welcome, but hopefully I will, keep something. I got out of half my position of Facebook. So I bought Facebook put options for $4 and I got out of them today at $64. So this is what I mean by monster moves in the market. I bought the 300 puts of Facebook here a few days ago. I told those in my early morning session on Monday that Wednesday we're going to have earnings in Facebook. It was a distribution, and unfortunately, I didn't put enough money into it. I made a lot of money, but not enough. So I'm also short some Tesla stock. I'll talk about that. I bought some puts on Tesla. I'll talk about that. And anyhow, we'll see what happens tomorrow. Tomorrow, we've got a huge jobs report. Some of these options expire on the 18th, so I've still got some time left. You can see that I was long these QQQs in another account, and I bought these at nothing, and they went to about 900%. You can see my cost was 16,000, and I was making, as of today, 90,000, but I'm giving a whole lot back in the aftermarket. So it was really probably stupid to overstay my welcome and not take some profits, especially since they're expiring tomorrow. So I was kind of taking a shot that the jobs report, the market, what have you, was going to take things lower. And so this is what I'm making in my FX account. I've been showing you that I've been long pound New Zealand dollar for a long time. I'm short some gold. I'm short all of these stock indexes, and they'll probably go, we'll see how they go tomorrow. So Amazon is up about $500 in the aftermarket. So we looked at, so this is a very active aftermarket. People don't realize you can trade before the market and after, and this is actually where I make a lot of money in the aftermarket. So you can see Amazon is trading at $3,250 and it closed at $2,770. So up about $500. So these markets are swinging 20% up and down, on one day. And to me, that, that should be concerning to a lot of investors, good or bad, to have these kind of swings. So you can see this was Facebook. Facebook's trading at 240. Yesterday it closed at 323, so it went down $75. And I got out of some of my puts today for $64. I bought them for $4. So this is what I mean by making big money in the market. So I try and make my profits way more than my losses to compensate for the inevitable losers. I'm not trying to be perfect. I'm not saying that there'll never be losers. But if you can run $4 to $64, you can make a whole bunch of bad trades in between. So this week we were looking at the IGV, which to me is a proxy. So irrespective of what Amazon's doing and everything's doing, I'll talk about BABA too. I talked about buying BABA, and BABA's up $3 in the aftermarket right now. And I said this was likely putting in a bottom earlier this week. So this is the IGV. This is an ETF. And again, I try and look at all kinds of charts to, kind of sort out what's going on in the markets. The markets are going up and down 3% a day. They're going up and down 1% every hour. This is a very, very volatile market. And so, I would caution whatever you decide to do so with extremely, small positions, because the volatility is just enormous. So this is the IGV, and what we see is, to my mind, IGV put on a very bearish price pattern in the form of this double top and head and shoulders. It looks just like a man and woman's left shoulder. The peak is the head, and that's the right shoulder. And when you connect it all, you have this kind of neckline. So when you run a line throughout the entire pattern, you can see that we hit a juncture yesterday where we made a new high and close on the low. And so I was looking at this as a resistance level. And so I started actively buying put options, which is a bet on the decline. So these are very leveraged bets. I bought the 340s, the 335s, and you can see today we closed at 340. Today we're going to be up in the aftermarket based on this Amazon news. But to my mind, this thing is still going down. So again, this is where you have to kind of eliminate all of the distractions, swirling around. Today we had the EU raise interest rates, British UK raised interest rates, all kinds of things are swirling around. And so I try and just keep an idea of what I'm trading and look at the risk reward of all of the parameters of whatever I'm trading. And to my mind, this is preview of coming attractions in the stock market. How it gets there, we don't quite know. It's going to go up, down, sideways, and everything in between. But to my mind, this thing is going lower. So I want to make a bet on the downside. And so here is this head and shoulder. This is a weekly chart. So every one of these price bars represents 1 week in time. It takes 1 week to put that on. So this is not a 15-minute chart. It's not an hourly chart. This is a weekly chart that gives me a bird's eye global view of what's going on in this instrument. And this is an ETF that has all of the technology stocks: Microsoft, Intuit, Salesforce, etc. So to my mind, technology took us up, and technology could lead us down if the market cracks. So you can see, in addition to this head and shoulders, we also have what's called an ascending broadening triangle, where prices go up throughout the pattern. They start out narrow and widen and broaden out at the top. So to my mind, you had the convergence of two very bearish price patterns. And price, when you see the patterns then translate into a trajectory. Once you see a pattern, it typically should go in one direction or another. We'll take a look at Amazon in a minute, where we saw some patterns and now we might be ready to bust those patterns. So what I do is I look at the patterns and then I see how the market responds to the pattern. So you can see that right here, we broke the neckline and the lower end of the supporting line of this ascending. So to my mind, it set this in motion for a lower trajectory. But, if the market catches a bid and starts going back the other way, obviously I'm not going to say, hey, this is, I'm going to stay short. If this starts going the other way, it will start busting the implication. So there's a lot that goes into trading. I'm trying to spend the last couple of days just giving you, a high level view of how I just look at patterns and, price action. And so it's going to be very interesting to see how we play out over the next couple of days. So right now you're looking at a key reversal. And this is, I look at, I look within. So once I see a pattern established, I look for an individual bar that then lets me join the trade and also tells me the risk. So let's assume this is what it looks like tomorrow, where we close on the low. Then going into next week, I would basically say, put a sell stop under the low, which is a pending order, and your stop loss there. So a pending order requires the market to confirm what you're looking at. So if you put it, I don't just get in at the market here. What I do is I require, so, what I'd like to do is see the market go higher and then hit me and then put me in, and then I know that it'll be a good trade. So lot of stuff swirling around the market, but I still feel, I mean, you could even come up here and re-bang the upside of this thing and still turn down. I just feel that this is a very formidable bear price pattern. And, you know, despite all the noise in the market, I think we should, you know, keep going down. But, you know, there's all kinds of things that can happen in the market. We, you know, caught a bid here. I don't think it's caught, you know, going down. So we'll have to see what happens tomorrow. And this is the fun of trading. I made a whole bunch of money on the observation of this, and I hope I don't, you know, give it all back in the market action tomorrow. So we'll see. This may not be quite ready to go down, but I still would sell, you know, higher. I would continue to sell the rallies in the market. But we'll see what happens. I mean, Amazon could be a game changer. This is what happened in Amazon today. So what we were looking at, and this is why, you know, you can't really set anything cast in stone. So I was looking at this pattern, then you have a breakout of this pattern, and then this is the, you know, I play earnings results, you know, all the time. I will buy or sell something before a company releases earnings, but you have to be aware that, you know, opens you up to all kinds of risk. We're trading up there now. This is where we're trading on Amazon. It went from here to there. So now the question is, you know, is this rally real? Are we going to go straight up through all of this? To my mind, that's really not how prices work. So now, you know, I try and do a visualization process. You know, if we close here, you know, can I start seeing that? And to my mind, you know, this pattern is still in force and effect. And so we're seeing a very, you know, ebullient, you know, aftermarket here. But by, you know, tomorrow, this $500 rally could, you know, fizzle and, you know, something else could happen. So this aftermarket, anything could happen. But right now you're getting a very robust rally. And so now you're starting to bust the implications. So for a while, this double top said prices were going down. And sometimes the pattern does its job. And then you've got to look at price action, you know, as it, you know, does something else. So the byword of being a trader is that you can't have fixed or locked ideas. You can't have fixed or locked opinions. You have to react to what the market is telling you. And whereas I thought this thing was going to go lower, you know, if the market's going to go the other way, then, you know, you got to get out of the, you know, the way and not fight it. So I'm not really sure sometimes on these presentations how to present the nuance of some of these ideas. You know, I really obviously struggle. I look at patterns and then I look at how the market reacts to the patterns. And if the market stops reacting to it, then it invites or necessitates an equal or an opposite thing. So, you know, I can't just go into 30 years of trading on these presentations. But I'm just trying to give you, you know, a bird's eye view that I make all of my money by just looking at this. I don't care about what the earnings were. I don't care about, you know, what is happening in the EU. I don't care that, you know, the UK raised interest rates. I'm just trying to make risk reward calculations every day on the instruments that I'm looking at. And so the nice thing about, you know, so I'm not going to get into that, how to play earnings. That's a whole other, you know, kettle of fish. So to my mind, you know, the IGV is still going to go down. You know, it rallies back and forth. And what I like to see is how a market closes relative to the high and low. So this is very key. So it's only Thursday. This is a weekly bar. So, you know, this is going to be, you know, big difference if the bar ends like this, or, you know, by the end of the week or Friday, tomorrow, we end up there. Those two closes will be, you know, completely different. And if we close strong, then I'm thinking we still could rally back to this breakout area around the 370. And I still will think that it's a sale up there. To my mind, you know, the pattern is So what I call these governing patterns, because to me, they govern or dictate how a market's going to trade going forward. Now, we could have all kinds of swings in between, but this is what got me into Facebook yesterday. Facebook was an extremely complicated trading pattern before it broke. So this is what Facebook looks like after earnings yesterday, just a falling knife. Now, I was telling our members to start shorting this on Monday because of a pattern that took place all the way here. So just like IGV, you could get all kinds of noise or distraction, in the present time that takes your eye off the ball. So right now, this thing looked like it went from 290 to 340, 330. This thing looks like it was headed straight up. So if you were just trading this or based on this and just had a very limited time frame where that's all you were looking at, you would have think, well, there's a double bottom here, what have you. But if you look at the greater history, to my mind, this was the pattern, which is just like IGV, which showed you this head and shoulders. Now, that doesn't mean that you can't have all kinds of rallies before this thing coughs up and gives way. And it's the same thing with IGV. We came off, we may still rally, but I will always look at those rallies as selling opportunities because of the pattern. And so sometimes the patterns will then, get what's called busted. If this started, keep going up here, it would have negated that pattern. So I watch it how the market kind of relates to the information that and then within all of this, you had all of these other negative patterns. You had a double top head and shoulders there. You had a head and shoulders here, and the whole thing was very negative. And so all you did was you kind of came right back to this breakout area, this neckline, which is a giant fake out, and then you end up there. So I was looking at this on Monday when I bought these put options. So, I took a very, very, in a way, I was just throwing away the money because the options are so expensive now because of the volatility in the market. I'm not going to go into premium and volatility and whatever, but I was buying these 300 put options for $5. And I was, the market was trading, when I bought them, it was trading at 320. So I was $20 out of the money plus the $5 I paid. So I was $25 out of the money. So I required Facebook to move at least, $26 for me to make money. And you can see that it moves $75. So effectively $5 turned into $65 by virtue of this move. And it was just based on that pattern. So Steve says high five on that call. So we have a morning program called The Boiler Room. And on Monday, the first thing I said, Facebook's going to announce on Wednesday, this is what I call a distribution pattern, where people, have been getting out here, here, and here. Now, I think Tesla is in a giant distribution pattern. I went short Tesla today. Kind of got in early, was getting my hat handed to me. This thing went up $40 up my bum, but I stayed the course because I believe in the pattern. So I got in around 900 and went right up to 930, 940. And I just added to my short position. I just kept on adding as it went higher. Now, I don't suggest you do that. That's usually a prescription to lose a lot of money. But to my mind, this is a distribution pattern, meaning that I think people are slowly getting out of this stock. Here's a double top head and shoulders there. Here's a double top head and shoulders here. Here's a double top head and shoulders here. So this looks just like Facebook. And I think you're going to have the same consequences as Facebook. So you can see we had this neckline, just like Facebook. Prices broke out, shot back up, retested it. And now I think we're ready to go down. So now if I think something is going to happen, I like to wait until I see a certain bar that tells me how to get in this trade. And this is a perfect example of a perfect setup of how I would look to establish a risk reward trade. So to me, these giant bear patterns have been put in. A bear, so this looks like the letter M and a double top, and a double top precedes a downward trajectory. Now, how it gets there, what time frame, where it's going to go, these are all unknowns. But what I can control is where I join the trade and how I assess my risk. So to my mind, this is, I look for what I call my insurance day bar. I coined this. If somebody steals it, it's mine. This is what I call an insurance day bar, where it's a key reversal, where I observe how the prices close relative to the high and low. And you can see today that we went higher, and by the end of the day, we close on the low of the bar. So it indicates that the market tried to go higher, but by the end of the day, the sellers were in control. Now, the way I would set up my trade is that I don't just go in at the market tomorrow and just say, okay, I'm just going to buy it as it opens. I want the market to confirm what I'm looking at. So what I would do is I would simply sneak a sell stop under the low. I think today's low is like 881. What is it? 880 and a half. So I would basically look to short this stock at 880 on a stop. That would be a pending order and a resting order. And so tomorrow, if this opens, and right now Tesla's trading, up about $15 in the aftermarket, it's trading about 904. So I would have my resting order there. And if Tesla goes up tomorrow, guess what? You're not put in the market, no harm, no foul. But what happens is, if it goes higher and then nails you, you could be put into a great trade. So I look for the market to confirm what I'm looking at. And then I would put a stop loss behind this, thinking that, we've seen the risk today that we shouldn't be able to get above there. So to me, this is my risk. 937 was my risk. So I put a, 940 or what have you. So now you've got a $60 risk. Sounds like a lot of money. It is a lot of money. But, if you have a $5,000 account and you want to risk, 1% of your account, that is $50. So that tells you if you've got a $60 risk, you could buy about 8 shares or sell 8 shares. Is that right? 8, no. 0.8 shares. So about 1 share. So you could buy or sell 1 share. 1 share, if you lost 60 bucks, that would equal to about 1% of your $5,000 account. So that's how I set up my trades, where I have a specific way to get into a trade. And if I'm wrong, I have an area where I'll get out. And then I require the market. Jesus, this market is just firing. I gave back so much profits now. We'll see what happens. We got a jobs report tomorrow. So this is how I'd set up a trade. I start off with a premise that, I think this is in a bear phase. There's a pattern. And then I see a key reversal. And then I'm looking to join that. And so I'd simply put a sell stop underneath the low. And if tomorrow it opens and goes straight up, I'm never put in this trade. So that's why it's great to have the market confirm what you're looking at. So, and this is what's Tesla doing in the aftermarket. It's up about 15 bucks. It's trading at 905. So the market is soaring in the aftermarket based on this Amazon turnaround. We'll see if it can sustain itself. It may be able to, but again, so this is the Dow Jones today. So we'll see what happens tomorrow. Tomorrow we've got a big jobs report. The first of every month, there's a jobs report. So right now the Qs they close at 353. And because of this Facebook thing, I'm sorry, the Amazon thing, it's trading up here. So it's gapped all the way up here. So this thing may require to come up here, maybe put a double top here or what have you. So again, we'll have to see how this acts. This could be a bottom, and now we could go up from here. So I just react to what the market is telling me. If I'm wrong, I get out, clean off, reassess, put on another trade. Thanks for that, Steve. Sometimes I don't know how to communicate some of these messages. The market's moving so fast. There's so many cross currents. And to my mind, if the market is confirming, then I see it's one way. If it's starting to do something else, then, there's a red flag that goes off in my mind, and then I'll just do the opposite. So I was telling you, in May when I saw Beyond Meat, I thought it was going down. It started to turn around. I got long and I made more money than I made all last year in one trade, just by getting on board a trade that didn't do what it was supposed to do. So I don't know how to really explain that in a very nuanced way. So the other big trade that we were looking at this week is the pound New Zealand dollar. So I never like to see these kind of things when I'm long, makes a new high, closes on the low. But this is where you can say, okay, I have, a few positions. Maybe you can, take off some risk here, look for a pullback. To my mind, the path of least resistance is still higher, even though we see this short-term impediment, this key reversal. We could pull back to this line. I talked about it, this week. We could easily pull back to, 202, 202 and a half. And when you see these reversals, meaning that, makes a new high, people always ask me, how do I get out of positions? The market starts telling me. But, to me, you can't just trade these, reversals in a vacuum. One swim doesn't make a summer, meaning that just one reversal is not going to turn this whole thing around. So, we could turn around in the short term, but I got in at such a good position. I got in at 192.77. in the 196s and 199. So I'm in, all the way down here. So I'm not getting out. I would look at any pullback as an opportunity to get long. So AJ says, so a lot of people are talking about the color of the bars. To my mind, I just look at the proximity. So I look at how a market, so to me, how a market closes is very important. So you can see I look at charts on daily, weekly, or monthly. I'm not looking at 15-minute charts or what have you, because I want to see the most history. My whole objective is to take big chunks out of the market. So if you've got to move from here to here, I want to take a piece out of the middle. So if this moved from 188 to 205, that's a $17,000 move or what have you. If I could take 500 or 600 pips out of the middle of that, that's what I'm looking to do. I'm looking to take big carve outs out of monster moves in the market. Here you went from 2000 to 188. So you had huge moves on the way up and the way down. And by the way, a pattern preceded this move down. Here was a beautiful double top, and here was your key reversals. Made a new high, close on the low, made a new high. So even though those bars are blue, I look for the proximity of the close. So now, this may not be on the low, but I think we can all agree that, this closed closer to the low than the high. So it indicates to me that this market went higher, and by the end of the day, the sellers were in control. Now, I don't look at these bars in a vacuum. So the reversal here is not the same as the reversal here. You have to look at what's going on that precedes it. So there's a bullish pattern, there's a bullish trend, and just because you have a reversal here doesn't mean, okay, we're gonna get short now and this is what's gonna happen. So, there are horses for courses, and there are times to, look at these reversals when you see emerging pattern that then precedes a price direction. But, I simply look at where a price of the bar closes. So once you see the double top here, and now you think this trend is underway, now you see this top, and now you see another key reversal, makes a new high, close on the low. Basically, I would have, gotten short here, put my sell stop right there, put my stop loss there, and you can see I wouldn't have gotten stopped out, and I would have been in a beautiful move. But once again, all key reversals are not created equal. Here's a key reversal. It gave way to a little price, but the bigger trend was higher. So you can't just indiscriminately just fire at these things. You have to understand what is the pattern that's governing the underlying direction. And so to me, pattern precedes trajectory or direction. So this, to me, this inverted head and shoulders is a bull price pattern. And so once it kind of crosses through the neckline, that confirms that now the next direction is going to be higher. So I would use any pullbacks to buy it in recognition that this is the governing pattern. This is going to govern or dictate prices probably for many moons going forward. And it was the governing pattern in Facebook that put me in the direction that allowed me to buy these puts for 5 and get out for 65. So Ricardo says, in 1 year, you have head and shoulders top, and how do you know the directions? That's an excellent question, Ricardo. And sometimes that is the struggle. The market will give you one pattern, and then it will give you another, and you need to decide which one is the governing or the governing pattern. And this is the conflict. The market will throw you these patterns all the time. You'll think, well, isn't this a double top? And so when I'm at the least bit ambivalent, I will keep peeling out to the longer term frame. So it's just like anything else. The more history you know, it's understanding the cards that you're holding. So if you're looking at a 15-minute chart, you're just looking at a gambling instrument. The market can go anywhere in a 15-minute chart over the next 4 days. But if I look at this chart, now I can start making some long-term assumptions, which I have. So you can see the pound New Zealand has been in a stealth bull market for 5 years. And I said as much all the way back here. This was late 2016 and early 2017 when the market came crashing down, made a bottom, reacted off the bottom, retested the bottom, and then came and put this W pattern there. And at that time, I said the market has bottomed 5 years ago. And you can go to all of my videos on YouTube. You can go to all of my webinar series like this. And I've been consistently saying this is in a stealth bull market. And you will see probably something like that. So, seeing this head and shoulders here, it looks very formidable. But to me, I was betting that was the governing pattern. So sometimes you get this breakout and then all of a sudden it's back here. So this is what I was talking about, like Amazon, where the current price action starts busting the implication. So if you thought that was a head and shoulders, and maybe here you still thought it was a head and shoulders, by the time it gets up here, now, it's like, this is not governing this anymore. Because if it was, it would be doing that. So that is a good question. And, sometimes, it flummoxes me. I get thrown a pattern and I'm going, okay, is this real or is this just an interim kind of thing? And so to me, once I understood that this was a bottom, then every time I saw another bottom, I started buying it. So here was another double bottom. Then we came down and now we formed another double bottom. And, I think we're going to keep going that way. You have all of these bottoms. And if the market has bottomed, it's going to do what? It's going to go higher. So I, operate now on the assumption that I don't get, freaked out when the market comes down 100, 200, 300 pips. To me, I actually look at this as a buying opportunity. At some point, when the markets break out, sometimes they retest the breakout area. This could easily come down to 201 and then do that again. So it's kind of understanding the big picture and then drilling it down when the market throws you an opportunity. Seeing the wood for the trees. Yep, that's basically it. Vladimir says, Pamela says, if we buy your program, do you help us decipher the direction of the market? So I should have done this. I actually wanted to find, some of my old, maybe I'll just indiscriminately try and. So yes, Pamela, that's the purpose of this service, is try and, help you kind of peel apart, and interpret what's going on every day. I just wanted to, maybe just find something, and I wanted to just find some of my old communications. I meant to do that today and then I forgot, just to give you an example of things that I've been saying all year. So I'm just, sorry, I should have done this earlier. I just wanted to find some, okay, so maybe this, so we'll give you an idea, Pamela, of, and I don't even know what this says, I'm just guessing. So this was, when was this? This was November of last year. And I was talking about this since last February, where in this, I kind of titled this newsletter, Tale of Two Markets. And this is what I send out to, people in our elite program, what have you. And I was saying how the market was being led higher, mostly on the backs of a half a dozen companies, Apple, Microsoft, Google, Amazon, Netflix. But I said it was masking the underlying carnage in dozens of second-tier stocks like Peloton, Zoom, Beyond Meat, Upstart, Coop, which have crashed. And I was saying this since February of last year. I was telling our members to short Peloton, Zoom, Beyond Meat, and QuantumScape, and half a dozen other stocks. And so this is what I do. I alert you to, impending setups. This was back in November to tell you to sell Coupa software, COUP. And I think Coupa is like 50% lower than that now. So this is from a newsletter that I sent out about 2 months ago. And in those 2 months, I think Coop, where is this thing? It's $124. I said, sell it over $200. So yes, I do kind of give you indications of how to handle these market conditions by looking at the long-term sequences. So my newsletter went out right there, around late November, and I said shorted at $206, and now it's $122. So that's an example of what I do. I send out a newsletter every night alerting our members to a risk reward opportunity. And the whole purpose is, most people will focus on the did this thing work or not. So I said shorted at 209, right now it's trading at 122. So you could have made 50% of your money in 2 months by shorting Coupa software. And what I try and do is show you the patterns that I was looking at. So most people will just, focus on this and say, did it work or didn't it work? It doesn't matter if it worked or didn't. What I'm trying to do through the pattern trader is educate you guys to make your own decisions by looking at the markets in an objective way. And the markets, through their pictures, tell you where things are going. And I said Coop formed a massive double top, head and shoulders. These are giant bear patterns, the same bear patterns that we're seeing on IGV, the same bear patterns that I'm seeing on Facebook. And so that's what I was looking at the time. And so pattern precedes trajectory. I don't care what you're looking at. Coop, pound versus New Zealand dollar, it doesn't matter. So this is what I was looking at when I sent out my email in late November. I said, this thing put on a double top and a head and shoulders, and that is a bear pattern. So right here, when it cracked a certain level, I said, sell it there at 209. And now it's at 122. So that's how you make money in the market, taking advantage of these big moves. So Rami says, how do we get into the program? So after this webinar series today, I'm sure our team will send you an email and connect with you. And you can't just buy it off our website. It requires that one of our team members will explain everything. And then you can decide if this is what you want to do. So we don't force anybody. It's not available on the internet. This is called the Elite Program, where I send out an email every day. Maybe there are some people on here who could talk about it. But I just hear astounding results. Some of our members are doing better than I am. So they say I'm up 500%. I'm doing all this, so maybe they're taking a lot of risk. But I've been doing extraordinarily well in the markets for quite some time. We actually have a published track record, which is just a compartmentalized. It's just I send out one trade a day or two trades a day. I see quite a few trades on and on. And so, by the way, I take shots in this aftermarket. I'm actually taking a shot at shorting Amazon right here. I can't see, like, there's a lot of risk going short, when it's up $500. So I went short right here at 3,200, and we'll see what happens. Because I think the markets are still in a down phase, that notwithstanding all this hoopla, in the aftermarket, that to me, this is just a selling opportunity. Every time it rallies, I just sell into it. And I should have taken my profits today. When you get a 4% profit and you're leveraged, you're just insane to hold it on. But, I've got these IGV, they expire on the 18th, and I'm looking for a big move. So we'll see what happens. But probably I should have, gotten out of more than I did today. So Duncan says the Elite is a fantastic program. So Duncan, thank you for that. Duncan is one of our Elite members, and you can talk to our Elite members. I'll also show you our review website. You can see what others, have to say, and you can make up your mind. I, make all of, most of my money trading the market. So, this is a good business, but it costs me a lot of money to run this business, and the profitability is not as profitable as the money I make in the market. So I just do it as a service to, all today. I was looking at these analysts, on this TV behind me. I don't know. I watched this show on this financial show behind me, and you've got these, analysts come on all day. I watch a guy at night in the United States. Guy's name is Jim Cramer, and he's an ex-Goldman Sachs guy. So you think he's an expert, and everything this guy says. I mean, but the problem is that small people who don't understand the difference are listening to this guy. So after PayPal got just decimated the other day, he was saying, I would buy this thing. So you hear all kinds of crap. So he was saying, I would buy this. And so that's like trying to catch a falling knife. The falling knife is falling at 100 miles an hour, and you're trying to clasp it before it carves your chest open. And that's the same thing as trying to buy this. So people are talking about Facebook now. It's a great opportunity. You have to just watch the markets. You can't listen to anybody. You can't listen to the news. Isn't going to tell you. The market is always right. The market's going to put on a pattern, and either it's going to go consistent with the pattern or it's not. And so how do you know a pattern is going to work? The market tells you. So when you see a double top and it crosses the neckline and it keeps going down, guess what? That is a top. Now, sometimes we'll see, patterns that'll look like something, and the market will go and, it'll go the other way. And so you have to look at the market. The market tells you where it wants to go. Here was a double top, and it didn't quite cross the neckline. So sometimes the market will trap you. So you can see that we had this neckline here, and this bar didn't quite come through this neckline. It didn't confirm. It didn't go through here. So this is a great example of how we see certain things. They look real, and then it goes right up our ass. So you have to understand that this was still in an uptrend. So, you see these patterns, you see these things, but you have to understand there's a time and place where the market is ready to go in the direction that it's indicated. And again, there's a lot of nuance associated with that discussion, and it's impossible for me to cover it all. But I think you've seen enough this week where you see the patterns and the connection to the price behavior, where, I put on a whole bunch of, yesterday, I was very actively selling into this upward motion in the IGV. Now, how did I do that? Why did I do that? Why? I mean, it was insane. Why would you buy puts into an up market? So you can see the IGV in all these markets went from 320 to 360. And yesterday I was buying puts, which is a bet on the downside, by the fistful. I was buying the 340s, the 335s, the 310s, anything I could get my hands on. And today IGV was down 15. And I made a lot of money if I had gotten out. I'll see if I have any left tomorrow. But, I think notwithstanding, we have a rally here. I still think we're coming down. So once it kind of got into this area, I could see there was a key reversal here, made a new high, close on the low. And so I started setting up my trades based on the observation of price action within what I assume is a very bear market. So this is the correlation between price behavior and how you set up trades. I don't care if it's Tesla, the IGV, BABA. I was talking that BABA, could have traced out a bottom here. And we're seeing BABA up $3 in the aftermarket in a very negative day. Where's BABA right now? It's up $1.50. Not quite sure. We'll have to see. I mean, I still wouldn't. I don't want to buy anything right now. I still think the markets go lower, despite all of this, Amazon kind of misdirect. Trevor says, I made a killing on Roblox just from the little I learned from you. So yeah, Roblox was one of the shorts that we talked about in the boiler room at 116, and it went to $60. So Rob says, I can see you don't have to win every trade. So it's not about being perfect. It's not about winning on every trade. It's just winning big on one trade. So my one trade last year in Beyond Meat made up for, hundreds of little bad trades. So that's most people, when I was managing money, the first thing people would say is, what is your win-loss record? And if I'd said 89%, they would think, well, I'm a genius. I'm going to go with this guy. But I think, in 2019, I never won more than 50% of my trades in any individual month. And yet I made 14,000 pips or something. I made an absolute fortune. So it's the quality of your wins versus the quality of your losses, the quantity of your losses. And what I'm trying to do is find moves that are going to project for, bigger trajectories. I got in at pound New Zealand at 192.77, is trading at 204. So what is that? 1,100 pips, and I'm still in that trade. So if you can make 1,100 pips on one trade, and yet I could lose 100 pips on 4 trades. So now I've lost 4 out of 5 trades, and I'm still up 600 pips. And that's a concept that most people don't understand. And I think this is why, and I've talked about it a little bit this week, we talked about risk management, is that most people are trading for too small an outcome. So if I'm trading BABA, my expectation is I'm looking for like 135, 140, 155, what have you. I'm looking to get in here, take a $2 risk and make a $20 gain. And so most people are trading, the FX market or what have you for too small an outcome. If you're trying to make 15 pips or 20 pips or 30 pips, I've never really talked to a lot of people who are trying to make 100 pips on a trade. I don't enter a trade unless I can make 150 pips in the Forex market. Unless I can see some trajectory where I can make 150 pips clear, I don't enter it. And so if you have a bigger outcome, that way you can win over time. So it's all about being consistent. But if you're trying to make 10 pips on a trade, and then you have to risk 10 pips, and then you do this 5 times a day, can you see how quickly you're going to get carved up? Or the broker's going to make all the money because the broker's charging you 3 pips on every trade. You're trading, 5 times a day. So you're paying 15 pips just in the spread, and you're trying to make 10 pips on your trade. So I don't trade the Forex market unless I can make 150 pips. And I typically will risk 50 to do that, which then means that I have a 3-to-1 risk reward ratio. So even if I, lose on 2 out of 3 trades, I can still be a winner. The math shows you I can lose 72% of my trades if I have a 3-to-1 correlation on my trade. So today, I bet $5 on these put options in Facebook, and they went to 65. So I made 12x or whatever that is. So now I can lose a whole lot, trying, out other trades. So I see Amazon starting to leak a little bit. I shorted it at 3,200, and the aftermarket is 3,186. So I think this market still comes down, despite all the razzle dazzle today. So yeah, IGV is up about 800 in the aftermarket, but I still think it goes to 260. It's just a question of when. So Vladimir, ever trade the index futures? I've traded everything. I was a commodities broker for 20 years, Vladimir. I've traded everything under the sun. And again, it doesn't matter what you're trading. If you're trading, Amazon, the euro yen, pound New Zealand dollar, Facebook, to me, it comes down to, pattern, direction, trend, and risk. It all comes down to risk and reward, right? So if you can understand your risk, then wherever the thing's going to go, whatever the outcome is, that part you can't control. But my greatest trades were when I understood the risk. And, if I understand the risk, I will tee it up and take much bigger positions. So if I can dial something down to where it's a very small risk. So this was kind of a counter trend play where, there was a bunch of things going on here. It's kind of hard to explain where, again, this is where, to my mind, the market broke a significant neckline, and my expectation was that it should do that. That's what I thought that sequence and that pattern should lead to. But what I, think doesn't matter. And when this thing started doing a U-turn and coming back to this neckline, all kinds of warning signs went off. And so it was right here where I saw this little narrow range bar, what I call an inside day bar, where you see the range of that day sits within the range of that day. And so I was starting to look at this thing and saying, this is a rounding bottom. This is a coil, and the energy is going to unleash to the upside. So now once I saw that, now I knew I could set up a trade to buy the stock there. And that was my risk. So this is when the stock was at 120. And so I started buying this actually in the pre-market session, where I started getting it here. And then it opened in the regular session. It didn't even have that low. It just opened higher. And then at the same time, I loaded up on the $125 and $126 call options. I bought the 125s for $1.50 and they went to $23 on that move. But to me, it was all about understanding my risk. So that was my risk and that was my reward. So can you see, if you can understand the sequence of how to get in, where to define your risk? So when I see bars like this, when I see a double top here, and then I see the price action, we have this key reversal. And for those of you who bought my book yesterday, it explains this in greater detail. So you have a double top and you have a key reversal where it makes a new high and closes on the low. And again, what this tells me is that the market went to a new high in this thing and then closed on the low. So the sellers were in control. So despite the fact that this had a very robust day, the sellers were in control in a market that's going down. And so I'm just looked to join that trade by putting my stop loss there. So that's my risk and that's my reward. And this is what I look to do, set up these risk reward trades on an ongoing basis. Tony says, how do you get in the pre-market and aftermarket? So, if you're, this is a broker platform in the United States, and any broker has this is actively going on. You can see the Qs close at 353. They're trading at 359 based on this higher print in Amazon. And I shorted this stock at 3,200 just before the webinar. I just figured that, this is still in a down phase until proven otherwise. I'm going on the pattern, and I'm going that the market is still in a bear phase. And I'm also short Tesla. I showed you all of this right here. So I shorted Tesla all the way up from 896, 908, and 918. And then it went to 937, and I was losing a whole lot. And then it came crashing down on the close, and I would sell Tesla. You can see a moment ago it was trading at 905. Now it's trading at 900, still up about $9 in the aftermarket. But I'm thinking that this thing's coming down. So for those of you who weren't on yesterday, I'll put my book up again. So this is the link to the book. And it's a pay what you want, meaning you decide exactly what you want to pay for this. Everything that, anything you pay, $10, $20, whatever you want to pay for this book, I'll personally double that amount and donate it to the American Childhood Cancer Organization. And I donated about $34,000 over the past 6 months or so. I take all of the royalties from all of my books, whatever comes in, I double that amount and send it to this charity. And again, it's a pay what you want. You just come here, you decide what price you want, and that will explain everything. So with that said, what I would really appreciate from you guys is, I know you guys, if you go to Starbucks, everybody in the world asks you for a review, but it really would help me to understand how I communicated. If you would fill out that, if you would send in a review, good, bad, or indifferent. This is the review website. And
Hey Mark, David over there on YouTube says, "Thanks, Mark. I made more than $1,000 today shorting the Nasdaq. Your guidance has been paramount in this achievement. My best trade ever. Thank you very much."
wow, fantastic. Yeah, I don't have that YouTube. Yeah, and I don't know if this is the link to add to. I'm not sure if this is it. to add to a review. Dwight, do you know what the link to the? So I'm pretty sure this is it. This is off the internet, and there's probably a way to add this, but I'm just not sure. But again, you can come here. There's 191 reviews, and you can read what other people have to say to make up your own mind. But I'm not sure I see where to actually add to this review. So you just write a review right here. So yeah, if you guys could just click here and write a review. See, I don't know anything about my website or anything else. I just do what I do. I trade the markets. And then if you want to buy something, then, it's up to you. I'm not, Simon says, my 10-year-old is reading your book. I wish somebody had come along and saved me, 40 years of grief in the markets. The thing that I'll leave you with is the market is a dynamic and fluid place. And it challenges your assumptions all the time, but if you understand it, if you understand why it's doing something in the context. So we see, Tesla went from 880 to 937 and back down to 890 by the end of the day. It looks all random. It looks all over the place. But to me, I'm assuming that Tesla is in a distribution pattern so that I'm selling. This thing went up my bum the whole day today. I started shorting at 900, then it went up to 910. I shorted more. It went to 918. I shorted more, and then it went to 937, and ended up at 891. And it wasn't, by mistake that it ended up there. To me, it's in a sell pattern. So once you understand the pattern, then you can, understand how to react to these prices. And if you don't, you'll just get caught out, because if you're trying to trade off so this is a daily chart of Coupa, but if you're, looking at this, trying to scoop out, trades here and there, it'll look like one thing and then turn into another. So this looks like a giant double bottom here. So you get long, it goes up, and then all of a sudden it's in your face. So to me, this is not how to trade. This is just random. If you open up a 10-minute chart where prices can go, yes, you may be successful, but can you be successful over time? And most people are just darting in and out, trying to make $2 or $3 here and there. And over time, the costs and the mistakes will eventually whittle you down. Kenan says, should we buy or sell Amazon? So I took a shot at shorting Amazon. I shorted it, and I'll show you. I just took a small bet, but sometimes I just like the action, which is a terrible thing. So where's Amazon? So you can trade in the extended hours like I'm showing you. So I took a shot at shorting this thing. I sold short at 3,200. And right now it's trading at 3,180. So I'm making a whole $20. But, I just shorted on the principle that you still have that double top in there. I still think the market's coming down, and, it's up $500. So, I'll just risk a very small amount and, take it for a bit of a car ride. So that's probably not the greatest example. So to me, Tesla is the way I would set up a structured trade. So sometimes I just do things, but to me, Tesla is an example of how to set up a trade where win or lose, it doesn't matter. This is how I set up a trade, where I look at a certain presumption. You have a whole bunch of trades here that look like it's setting up this bear pattern. Now, sometimes you could come all the way here before it does that. So the markets can do a lot of different things. But what I'm looking at is today's price action, where you made a new high, you close on the low of the day. And so coming into tomorrow, this is what I'm going to do. And so I would suggest to anybody else, put a sell stop there that requires the market to confirm that what you're looking at. So that low was about 881. So I put a sell stop a hair under there. So that means that the market would be making a new low if it triggered you. And I doubt that it's going to make a new low and then go and make a new high. I mean, look, anything can happen, and especially in this market, it can and will. And then I would just put a stop loss the other side of that. And I would look at holding this thing for a big, long while. If this is correct, you know, if you just measure the bottom of this pattern from 890 to 1250, what is that, 350 bucks? So if we shave, you know, let's say 300 bucks off this neckline, takes you to 591. And I think that that is very realistic. In fact, if this thing breaks, I think you could go to 300 bucks. So anything can happen. And so that's how I would set up a structured trade. What I do in Amazon now in the aftermarket, that's just, you know, it's a bit of a gamble. But I figure, you know, I got it up 500 bucks. I shorted it at 3,200. You know, if it goes to 3,300, I'll get out. So again, I would really appreciate if you guys could put in a review, put something in the tip jar. I put in some effort this week. So, you know, I'd really like to know, good or bad, and doesn't have to be a good review. And, you know, I'd really like you to elaborate, use your words. If it was bad, you didn't understand it, you thought this was Chinese, that's fine. And if you liked it, then, you know, share what you liked about it. So I'd really appreciate that. Douglas says, when you say short Tesla, do you mean buying put options? No, shorting the stock is different than buying put options. So, you know, it's two different things. I did both today. So I sold short the stock and I bought an 850 put option when the stock was about 910 bucks. So you know, and I paid about 20 bucks for this thing. So, you know, you pay a fortune for these option premiums now. So when it was 910 bucks, I paid $20 for an 850 strike ending next week. So this thing has to close at 830 bucks by the end of next week for me to break even. And I also shorted the stock. So I guess you could say I'm bearish the stock. Thank you, Tyrone. Thank you very much for leaving a review. Rob says, thanks for your transparency. Yeah, so look, this is what I do. I try and share, you know, stuff that I've learned over many, many decades. I make a lot of money in the markets. I know a lot of people are losing money, mainly because of morons on TV, and you're just being exposed to just things that don't work. You know, these expert advisors with the Forex, you know, they sell you something for $300 and they say, well, you just put it on your MetaTrader and it'll trade away for you. You know, does that make sense? I mean, if you could buy something that would just trade in ad infinitum, if there was something, if there was a robot like that that worked, I assure you, you couldn't buy it for $300. JP Morgan or Goldman Sachs would be paying that developer billions of dollars for that if that worked. So that stuff doesn't work. The only thing that works is observing the markets and trying to take out bigger trades in the markets. So it's really consistency over time, which is a function of discipline, money management, and understanding the markets. The market's going to throw all kinds of looks at you. And so it looks all kinds of frenetic, but if you can compartmentalize it, like Facebook. Facebook rallied all last week, went from 290 to 330. So if you're looking at that on a 15-minute chart, it just looks like it's a straight up chart. Why wouldn't you buy it? Well, I was selling it and I made 12 times my money by recognizing the bigger global pattern. So this is what I try and do educate our members to the markets. So, this is, the email where I kind of share, what's going on, in gold or in the Russell 2000 or in the dollar index. And so, Kevin says, do you make more money in options or calls? So look, I really hate talking about options because you guys will go out there and you have to realize that when I bought these put options in Tesla today, I paid 20 bucks for it. I just dumped 10 grand. In my mind, I've kissed that money. It's gone. Like with Facebook, I put 10 grand into the market. I just figured, I was so far out of the money, it would take something extraordinary for that to pay off. And it did. And I made, 6 times my money or 7 times my money. But most of the time you're going to lose 50% or 100% of your money in options. So while you're learning, I would suggest that you do not buy options. Okay. Options to me are a bet on the underlying. So if I think Tesla is going to go quickly, I'll short the stock. And then I also made a bet through the put options. But again, I have to be willing to kiss all of that money goodbye. And if you're just learning, that's probably not what you should be doing. The tortoise wins the race. Get some confidence that you know what you're doing before you, go and, put on the turbo on your lawnmower. Yeah, Shveen says, this is my 3rd webinar, and every time I'm learning something new. So thank you. Antonio says, thanks very much. Amazing 4-day training. So thank you guys. I appreciate it. There's a lot of red on your charts. This should worry me. So that means that everything's going down, and I'm shorting everything. So when you short something and it goes down, you can see the NASDAQ was down 4% today. I made $500,000. And it's not a demo account. I couldn't replicate this on a demo. These are all real dollars. I have $1.6 million at stake in all of these trades. So that is not a demo. This is not a demo. This is out of my own personal broker account. So I have real money at stake on these trades. Byron says, you have a great on selling short is something I can't do. Yes, you need a margin account. So, I'm just trying to give you the principles, but if you, if you see in the Forex market, you don't have to, you can just sell something in the FX market. You don't have to have a margin account. It's much simpler. The mechanics in the stock market are much different. I recognize that. But in the FX market or the futures market, you can just sell something. You don't need to go short. You don't need a margin account. And so it may be simpler for you guys to, just start on a market that you understand. So Candace says, where can we trade the aftermarket? So you have to have a broker account that facilitates aftermarket trading. And most broker accounts in the US will facilitate aftermarket trading. But again, don't try and, put on the turbo, on your car yet. Try and get some training wheels first. You don't need to trade the aftermarket. There's enough going on in the regular session. So if you don't get it, don't freak out about it.
Mark, Robert on YouTube is asking, if Tesla short does not work, where would you put the stop loss?
Above today's high, 937, or above the recent. So there's some highs right in the same area, and that's why I kind of didn't freak out. It went up to the highs that it went to the other day, and I just figured it would stop there. I started shorting early, and this isn't a good example. So there's no reason to just short things indiscriminately. This is how, I kind of tend to lose a lot of money when I lose my discipline. wait for a day like this where it tells you where the risk and reward is. So you can see there are some highs right here. So this is in the area of about 945. So you should, put a wide stop. I would be prepared to risk. So the high today was 937. So, if you get short here, that should be a risk and that should be a reward. And you can still set up this trade with a 0.5% risk. So even though it looks like a monster stock and it costs a lot of money, you can do fractional shares on a lot of brokers. You can do 0.3 shares. But, if you make $300 on this thing, proportionally, it will make, big difference to your trading. Thanks, Tim. All right, so in order to start shorting in the market itself, what must happen? Because it seems like we're in the moment in the short market. It's really cool, but yes, I can understand that. So the mechanics of going short in the stock market is very different than the mechanics of doing something on the spot market where you just sell something. If I want to short gold, on the FX market, just sell it. Now the principle in the stock market is, first off, the broker does it for you. And I don't want to get dug in. But basically, in order to go short, you have to borrow the stock from somewhere. The broker will get it from another client account or go to the clearinghouse. You have to borrow it. There's a cost to borrow it. And so you borrow the shares and then you short them. And then in order to cover, you have to buy them back. And that's what creates, these short covering rallies when everybody's trying to get out of their shorts. And that's what happened, this week in the stock market. This to me is no more than a short covering rally, where it goes from here to there very quickly. It looks like a great, up move. But to me, it's just people got short here, then they cover, and it just adds fuel to the fire. So it's going to be very interesting to see what we do tomorrow. We may still have to hang out more, but I still think this is going to find a way to come down one way or another. I just hate giving up 600 pips in the aftermarket and having to retread. So you can see Amazon starting to come down. It went to a high of about 3,300 in the aftermarket, and now it's down at 3,100. So I wouldn't be surprised to see this thing crater. It had an aftermarket rush, and we'll see what happens. But I shorted at 3,200. Now I'll just put my stop at 3,200. I won't risk anything, and I'll see what happens. Mark says, these sessions have opened my eyes. I've done plenty of reading and made failed attempts at being a successful trading. Having fallen flat on my face has actually helped me to see that this information is pure gold. So I appreciate that. It took me a long time to figure all of this out. I've tried everything. I've burned out many accounts just like you guys on the way to certain revelations. And I wish I'd found, it sounds arrogant and self-serving, but I wish I'd found somebody like me when I was young to save me from all of this stuff and kind of figure out, the noise, because there's a lot of noise and clutter. And the first thing is it's all about being objective. It's all about shutting all of the external stimulation. So if you're listening to the news or you're listening to these guys, giving their, opinions on things, and if you're making trades based on some expert, nobody's an expert. To my mind, the market is always right. Jay Powell will say one thing, some guy, from Goldman Sachs will say another. Fine. It's all just noise. The only thing that's right is the market. And the market over time points where it wants to go. But it's like a magician, it's like the magician just doesn't come on, stage and show his intentions, doesn't just pull the rabbit out of the hat. It goes through all this distraction before it goes in its, but if you understand, so right here, this is all looks like noise. And if you're just looking at this and you don't really know how to evaluate it, it looks like a pickup. It can go anywhere. But to me, this is what I see. I saw a head and shoulders here, and I saw a head and shoulders here. And so this whole thing is like a rectangle top. And we broke out. Looks like we try to retest the breakout, and now we're going to go back down. And I think we will take these lows out. I do. Despite all the razzle dazzle in the aftermarket, it's just a question of when. And some of my options expire tomorrow, and it'd be a shame if I don't get the price that it closed at, which is 500 points away. But this is starting to drift down in the aftermarket too. So yeah, that was a terrible decision. I got out of some, but I was greedy. But I still have these IGVs, and I think they're going to go a lot lower. So, but what I do and how I do it, what I'm trying to do is show you how and why I made certain decisions. Some will work out and some won't. And over time, look, the reality is I'm trying to catch 3 trades a year. My one Beyond Meat trade in May, I made 7 figures on that trade. Today I made, many hundreds of thousands. So I'm just trying to find a few trades a year that work. And then there can be, all kinds of others that, you're trying. I tried BABA the other day. I got stopped out for $1. It doesn't matter. Sigmar says, do you have an alert when to get out of trade? So, the way I do it, Sigmar, is that. So this is kind of my open positions. So in my daily newsletter, I show you where my stop loss is, where the take profit is, and then I dynamically alter these. So these are my positions from, last night. I'm long 3 positions, pound New Zealand, going back to, actually that should read November 23. Then I added on January 5th, then I added again on January 10th. I got stopped out of the Euro Yen today. And then I'm in 2 short positions of IGV. I sent out a newsletter last night to add to the short position of IGV. So I kind of tell you where to put your stop loss, and your take profit. And then as the market evolves, I change these things dynamically. That's how I, inform our members of changes in price and what have you. Johanna says, I'm getting to be a better trader since I've been following you for a year. Eduardo, thank you. Lee says, are you worried about Friday optimism in the market? So this is what I've been trying to say. I don't try and think in terms of anything other than what's in front of me here. It's all about risk and reward. I'm going to trade Tesla. I'm going to set up my risk and reward. I don't care what the jobs report is tomorrow. I don't care what comes out tomorrow. I'm going to put a sell stop in Tesla at 880. And if I'm wrong, I'm going to get out. And it's as simple as that. Sigmars, you're welcome. Lee, thank you. All right, guys, I think I'm going to leave it there. Dwight, thank you a ton. Please leave a review if you can. It really helps me. It helps our other members, evaluate whether they want, this information and whether it's worthwhile. So thanks very much, and good luck. And if you join, I look forward to seeing you soon. If you don't, then hopefully we'll hook up somewhere on our respective trading journeys, and keep safe. That's all I can say. These markets are wild and woolly. They're extraordinary market conditions. We're seeing volatility outside what we've seen in many years. In fact, this day right here was the biggest sell-off and recovery since 2008. So we're starting to set certain metrics, certain records. And I think, certain things are going on that should be jarring to a lot of people, where stocks like Facebook and institutional holding can just open down 25%. PayPal down 25% in a night. So these are extraordinary times. All right, guys. Thanks a ton. We'll see you soon.
All right, Mark. See you. All right, everyone. If you have any questions about getting in on any of the programs, just send a quick email to support@thepatterntrader.com. All right. Bye, everyone.